Welcome back in. It's time for Money Tuesday and talking about your money. And we know that in uncertain economic times, sometimes folks will put money in a so-called safe place. That would be your CDs, your money market accounts, or just holding on to cash. But is your money actually safe? Stewart Welch from the Welch Group joins us by FaceTime to talk more about this. Stewart, good to see you this morning.
Good morning, Mike.
I know a lot of people who say, look, I just for the sake of safety, I'm going to buy a lot of gold. I'm going to put money in those areas where I just mentioned. So what about that?
Yeah, so actually, I decided to do this segment because there was a big story out of California. It was a group actually promoting buying gold, and they said your money is no longer safe in the bank. Banks are no longer insuring deposits. So I thought we need to get cleared up. So let's talk about three areas. So the first one is cash. A lot of people actually do keep cash, and some people keep a lot of cash. The question is, how safe is it? Well, it's as safe as wherever you're keeping it. And of course, cash is subject to inflation. It's because it's not earning anything. So any inflation tends to erode your cash.
And we do want to clarify the banks holding your money. They're still federally insured. What that report was, or whatever that was out of California, was incorrect. You noted that. I just want to make sure people understood what you were saying there.
Yeah, they are. So that's kind of next. You move into the banks, and kind of traditional where you might put your safe money is a bank certificate of deposit. You do want to make sure that your bank is insured by the FDIC. Most of them are, but you do want to double check that. And when you do, that money's insured up to $250,000. So you can, if you're a couple, you can have quite a lot of money in one bank that's insured. So you can have an account in your name for $250,000. The spouse's name for $250,000, and then a joint name for $500,000 for a total of $1 million. So that money is safe. We want people to be sure that they're comfortable with that.
All right, what about money market accounts?
Yeah, money market accounts. So I think when people think of money market accounts, typically they'll think of a money market account at maybe a brokerage firm, and everybody thinks, I put $1,000 in there, that $1,000 is always going to be at least $1,000. And that is generally true, but if you really understand money markets, it's a bunch of short-term bonds and commercial paper. So the values actually are fluctuating on a daily basis. But what happens is the institution manages that float to keep it at $1,000. And I think what I would add is that in most cases, it is actually not guaranteed. And there have been a few instances in history where that dollar has been broken. But generally, that's going to be very safe. Not something that concerns me, but something that you just need to be aware of.
Okay, and as we wrap up here, Stewart, if somebody has the means and they did want to buy some gold just as a safety, is that a good idea? And where's the easiest place they can get it?
Well, I don't think that gold would be in what I would call your safe money, because gold is going to have quite a bit of fluctuation, and you can either buy physical gold, like gold coins or gold bars, or you can buy it through an exchange traded fund. So there are lots of ways to participate in that.
All right, Stewart Welch from the Welch Group, thank you for that this morning. We do appreciate it, sir. Thank you.
Thank you, Mike.
All right. Well, still ahead now, if you have old